Hi everyone and welcome to this live coverage. As usual, I will share with you my views on the market, technically and fundamental. But anyway, what's to mention? Election days in the US, so the market is waiting for it and we are going to trade it. Market is ignoring macroeconomic readings, although I still believe that they're relevant because of the effect they have in the long-term economies. They are a measure of the health of the big economies, and therefore they are important to watch, even though I'm pretty sure we are not going to see any action coming from macroeconomics these days. Okay, so let's start by taking a look at the calendar. Give me a second. Here we are. Okay, there we are. This is this week calendar. Of course, as I was saying, everything is about elections today, so not going to expect much action, but what it's worth mentioning at this point is what we had over the past session, which are the uh, Chinese figures, trade balance, import and export plummet both, right? This is a huge risk aversion issue usually, right? This kind of rating are reminding the market there's a big risk that China is entering an economic slowdown, and therefore they will stop buying uh, supplies, metals from all the world, and therefore that will slow, of course, oil also, and therefore that will slow the developments of other economies. But yet, we haven't seen no reaction to these readings, right? Keep those in mind because after the elections are done and that settles on the result, the market will start taking back a look at this and will probably remember this kind of stuff and trade it back, okay? Anyway, there's nothing really relevant going on in Europe today. There was trade balance figures in Germany and industrial production. Slight disappointment here. The fact is that after having a healthy start for the third quarter with September, October readings being more or less positive both in the euro area and US, things are not looking that great as the time goes by. We are having some negative figures, we are having some disappointing numbers, and therefore that optimism about the third quarter being starting with a strong footing, it's the loading. Still, data is mixed in both regions, right? Yes, and Europe. So nothing is really offering a clear bias for the market. Nothing is terrible bad. Nothing is terrible good. Okay. Anyway, what it's also important to notice is that in general, we can say that US data is being more healthy than what we are getting in Europe. And while it's not enough maybe to determine the destiny of the euro dollar pair. The fact is that this stronger US data is supportive of a rate hike, right? It's supportive of, okay, for the case of a rate hike in next December. Yet that rate hike and the odds of that happening depend not only on that but on the result of today's elections, right? So keep that in mind and remember that the market will probably go back to trade central banks' decisions and economic policies after the dust settles. Anyway, I was taking a look at the figures coming from the UK. Industrial production was a bit of disappointment in September. Again, it's sort of a sign that after the initial plum we have after the Brexit vote, then we have a recovery in economic readings, mostly due to a cheaper pound. But now we are realizing that a cheaper pound is not enough, right? It's not worth having a cheap currency if you don't have a market in where to sell your assets, right? So the problem here is that still the Brexit, the consequence of Brexit, when the Brexit will be launched, and how the rest of the euro area will react to their decision, and if they would be allowed to remain in the single market, and if there are not going to be a split policy between Scotland and the Britain and the rest of the United Kingdom. Sorry. Anyway, that's the big matter in here. So I believe that the latest pound move towards the upside has been quite corrective, and that's it. We may see the pound resuming its line, moreover, on a Clinton victory, right? Anyway, For the rest of the day, we have the NISR GDP estimate for the third quarter, I do believe. It's usually a big market mover. Today it's not going to be so, but anyway, keep in mind that the negative reading here will wait further on the pound once the market finished trading as a result of the US elections. More Chinese data coming out in the upcoming Asian session, inflation, both producer prices, consumer prices. This is also big because inflation has been showing a small signs of improvement over the past couple of months, but I don't believe that is enough at this point. And if we have back a disappointed number, that what I was saying a few ago about market thinking about economic slowdown in China and therefore it affecting the rest of the world will kick in back. Okay, the Reserve Bank of Australia, it's also expected to cut rates tomorrow. I have to be honest, I'm not a big fan of the New Zealand dollar. I'm not sure if I follow their policies as well as I follow the rest of the central bank's ones, but either way, keep in mind that market trades expectations, right? So if we are now waiting for a rate cut in a year and we don't get a rate hike, the most likely scenario is that the kiwi will rise and will rise sharply. And on the other hand, this rate cut, which has been already anticipated, would have a little effect in the case of it taking place. We may see a wild spike initially, right? But then the market will probably settle back not far from the pre-announcement levels, unless the accompanying statement includes some wording about further rate hikes or it's extremely dovish or extremely hawkish, whatever the case, right? But keep in mind that the market's always trading expectations, and expectations here are of a rate cut. Okay, inflation in Australia is also relevant because, as far as I understand, the new Reserve Bank of Australia Governor Lowe has said in their latest meeting that inflation is less of a concern, right? And a trigger to cut or rise rates these days, meaning they don't expect inflation to go farther lower that we have seen earlier this year. They are estimating that they have seen a bottom there, so there's little risk that inflation will keep on falling, and therefore there's never snow, but a limited risk of another rate cut coming in Australia. Anyway, a strong reading in here will probably fuel the Aussie up. Okay, that's on Wednesday after the elections. Okay, for Thursday, I don't see much of a to work with, honestly. Minor releases in Europe, France, Italy, Greece, Portugal. Those numbers are hardly a market mover, although, as I said at the beginning, this kind of data is helping us to measure the economic health of the euro area, right? And while the market hardly reacts to these events, at the end of the day, they add or to the bullish case of the euro, or the contrary case, they put it back under pressure in the long view, right? Sorry, I'm talking too fast today. Anyway, Friday, we have a holiday in the US and Canada. I mean, the day will probably be slow. Keep in mind, there's a good chance that given this holiday on Friday, Asian session, London session will be quite active. And what I'm thinking right now is that we may see some profit taking after whatever the rallies triggered by US elections are, right? So don't get shocked if we see wild movements early Friday in European morning, right? And then the market going into quietness again. Sorry. Anyway, let me change and go back to what's really interesting our charts. Sorry, I'm not sure what I'm doing here. I'm having too many windows open at this point. Okay, here we are. Okay, here we are. I was thinking yesterday, right after what happened with the U.S. Over this past week, no, I mean the previous one, the FBI announced that they will further investigate into Hillary Clinton use of her private email server, and the possibility that she has been spreading confidential or giving a bad use to confidential stuff, right? That trigger a sell-off in the dollar. The previous week, I mean, not this one. A sell-off, I said, in the dollar and in stocks, riskier assets, and we saw strong gains in gold. We saw strong gains in the yen, right? Which are usually considered safe haven assets. So I was checking my weekly chart, right, yesterday, and I, sorry, before that, we have this past Sunday, the FBI is saying that, oh, it's okay, we didn't find nothing new, so we clear Miss Clinton. Uh, I have to keep to myself my personal opinion about this kind of information being shared 10 days ahead of elections, 2 days ahead of elections. I really think it's something uh, not good to do. But anyway, what I want to say is this. Yesterday we saw oil plummeting, right? Pretty much erasing all the gains triggered by that Trump probable victory case. The same happened with the dollar diminution. It was, if you take a look at the weekly chart, there we are, right? We are back to square one, right? Having erased on Monday all the past week losses, right? So, but that goes for safe havens. But if you take a look at the euro, the pound, the rest of currencies, and even stocks, right, which I actually follow, or oil, which is playing an independent game these days. But if you take a look at the euro, the pound, the Swissy, Australian dollar, Canadian dollar, whatever currency pair against greenback, the fact is that all of that while losses, right? Gains with losses of the greenback and mean gains in the pair. The fact is that they have not been an exit. We have corrected half of that move with yesterday news. What I'm trying to say here is that the market is really uncertain of what the outcome of the elections will be, and it's waiting, right? So no matter who wins today, or probably tomorrow for some of you, the result is going to be noticed in the charts, right? This latest dollar rally, sort of, it's telling us that somehow the market is expecting Clinton to win, but they are not sure, right? So, bottom line, there's a lot of room to go either side of the way. I do have to clear my personal opinion is that if Trump wins, we are going to see all hell break loose, the dollar plummet, stock plummet, even below past week lows for the green market for stocks, right? Because market has no clue how he will handle foreign policies, right? I'm talking too much about politicians today. Anyway, what I'm trying to say is that I do believe that if a Trump victory will be a huger market mover than a Clinton victory, right? So what we could expect it's to take a look at technical levels because actually what technical readings have to say sorry mean nothing for us today or maybe probably tomorrow neither, right? Anyway, for the dollar euro dollar sorry pair, of course the key resistance is that 1120 1130 region we have tested yesterday. This is a daily chart. If you make it smaller, you got your own charts and take a look and put a line around 120 130, you will notice that the pair has held there multiple times over the past months and even the past year. So that's a major resistance level. So if somehow the pair breaks above that level, I do believe that we have scope to go to 112 and even to complete a 100% retracement up to this 1280 level, which is for me the first major resistance we have to face. If a pair really manages to go beyond this level, there's a good chance that we can go up to 1460, which is the top of the last year and a half range for the pair. Not sure if the market will dare to push the euro beyond that level because, you know, we are discussing that in a month, right? The US is going to start tightening its economic policy again, while the ECB is expected to expand its stimulus, right? Or extended beyond March 2017. So, and as I was saying earlier, macroeconomic ratings in Europe are tepid, in the US are good. So, both supporting those cases for central banks. So, there's no real reason for euro strength. There's only reason for dollar weakness. Should Trump win, right? In the case of Hillary's victory, 11010 is immediate support, which stands for the 38.2% retracement of the line. 110, of course, the psychological figures, so that region below that level, 950 and back to 840, 850 seems likely. One word about this 850 low, as I was saying, that 1416 has been the top. 1460, sorry, not 16, has been the top of the range for the last year and a half. The fact is that 840 is the bottom of that same range. 800, 840, it's a price zone. But whatever, I don't believe the pair can break below this level, even though we have a sounded victory from Mrs. Clinton. Okay, going towards the pound. Sorry, I was taking a look at this daily chart yesterday because the pair has corrected higher up to 25.60. We have a hawkish Bank of England. We have some sort of delay coming from the High Court to the Brexit launch. So here we are. The pound benefited last week not only because of dollar weakness but because of self questions, right, going on in UK. Now we are back to the downside. Still, the same happened with the euro. If you take a look at the weekly chart, we have barely erased not even half the gains triggered last week in the euro. I'm not saying that they were all triggered by ES weakness, as I said, Brexit scenarios, high courts, and the Bank of England had their say also. But anyway, with today's negative reading on the pound and what we got there, in industrial production, I mean, right? The fact is that we are getting signs that things are not going that well and that Brexit will be chaotic. And, well, it's elections days. So after the elections, the risk it's back towards the downside to the pound. However, if somehow we break above this level, I was thinking of a rally up to this 2770 region, this formal lows, right? If we gain above that level, but still, I don't see the pair nowhere close to 130 over the upcoming weeks or months. Okay, I know it's a huge rally, I'm thinking, but well, it has a bit of support, at least for the upcoming days, for the positive or hawkish, better say, tone of Bank of England. On the other hand, the 23.6% retracement of that same decline is for me key because if you take a look at the chart, you will see that the pair has been unable to move above it for all of the past October. It finally broke higher last week, but if somehow we break below that 23, 10, 30 region, right, where we have some spikes and so, therefore, then the pair will have scope to resume its decline. I'm thinking short term 122, 120.80, the low we had on October 25. Yeah, that one. Those are the levels I will be watching for in a year. As for the dollar Japanese yen, take a look at the daily chart and see what happened here. After being since last February, I believe early February, below the 100 simple moving average in the daily, the pair finally broke above it. It reached the 200, pulled back to the 100, but held above it, and there we go back towards the longer one. Okay, currently around 100, 530. We have this high around 100, 515. So this region is for me the immediate resistance, and on dollar strength, if we break above it, the next probable bullish target for me stands around 106.16. Okay, this is the 38.2% retracement of the economics rally. The rally the pair had in between bottoming around 76 in 2011 and the high in the 125 region in 2015. Okay, so that's a major resistance level. if somehow the pair settles above it and I don't know, had a positive week beyond that level, that will mean a longer term rally, right? I know I'm talking about huge support and resistance today, but with a day like today, you don't know what will happen in the market. Sorry for not giving my term outlook as usual, but it's what I can take out of market today. There's no way I'm going to trade short term today or at least until tomorrow, probably the American session, right? But anyway, those are the levels I'll be watching and probably will be searching for opportunities in there. Okay, we have a strong gap towards the upside. 103.70, it's the bottom, right? We had on Sunday night. So if we break below it, the pair will probably go towards Friday's close, which was around 100 to 19, 1095, not pretty, right? But down to that level. Okay, those 70 pips will be pretty fast. I will be, of course, keeping an eye in the 100 to 80, 60 region because if the pair breaks below the 100 moving average and give us some follow through towards the outside, there's a good chance we are going back to 100. Okay, the Aussie, our friend the Aussie, it's got back to 77, got back rejected, but in here the range persists. The daily trend line has been I draw between this low from late May and this one from mid-September, right? We have a couple of attempts to break below it, but so far the price hold it above it, hold above it. Sorry. But anyway, it's unable to post higher highs, right? The 77 level is still a key. It has been quickly rejected from that level. Range bound, slightly upward inclination, but unless we clear 77.40, I don't see much of a reason to buy the OC at these levels. If it does, however, 78.30 could be the next probable bullish target, which is this here high. So don't get too excited if the pair gets that close and rush into profit taking, okay, if you're bullish in here. Anyway, the trend line these days is converging with this Fibonacci support around 76, right? So below this level, I do see some scope for a downward move to a 75.30 and even lower towards 74.50, which is for me a long-term line in the sand. I have said this plenty of times. As long as above this level, for me, there's no scope for a bearish trend in the Aussie dollar. Okay, keep that level in mind. Let me change. I will show you this chart not because I like to trade in straight stocks, but uh, because it's worth taking a look at this. It's the weekly one, right? We have go through all these losses yesterday, right? The elections, the Trump victory, probable victory, sorry, outcome. We are above that, right? The strong risk uptake dominate Monday. The Dow Jones race to a week of losses in a couple of sessions, right? But anyway, I'm following this trend line, which is keeping the upside contained, right? And of course, on a Clinton victory, we may broke above this trend line, pretty sure. The Dow will probably extend its gain 200, 300 points uh, 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 easily, I mean, right, with not much of to care about. So keep that in mind. Stocks will probably strengthen alongside with the greenback. If like stocks, don't hesitate with the Dow if it breaks the trend line. Gold, we have taken a look at what happened weekly basis. Uh, it has been playing pretty well with the Fibonacci retracement from this daily decline between late September and the low we have in October. Uh, uh, Furthermore, this week recovery is held at 1308, which was also strong support in the past, right? So this is the line in the sand. We are too far away, and I'm really not considering the probability of gold holding on to gains beyond this level should the dollar plummet. Because at the end of the day, I'm not sure how long risk aversion rally would last. But anyway, I don't see, really don't believe in a stronger gold these days. I do believe that at the end of the day, we will keep on trading Fed's decision. Of course, we don't know how Trump victory or Clinton victory for case will affect Fed's decision. My take, of course, and market stake is that if Hillary wins, then the Fed will keep on in its current path. But if Trump wins, the Fed will probably change course, right? This is the general sense, the general sentiment, not what is going to happen. I do agree with it somehow. Anyway, if the dollar strengthens, the main probable bearish target for gold for today and tomorrow will be the 1265 region, and honestly around 1250 if we break below it, but not much more. When it comes to oil, I do believe that we are 10 days away. It will be in November 18, the OPEC meeting, right? They have announced, let me put it in quickly, they have announced in September that they will cut production, they will sign an agreement, and they have been working on it. But all of a sudden, we have news that, yeah, we want to cut, but not me myself. Let other country cut. So that has been pretty awkward coming from them. And furthermore, we had news that the biggest exporter are exporting record heights of barrels. So actually, the probability that they will reach an agreement is new, right? And that's why the crude oil is back to this current 45 region. We may see some limited reactions in here to dollar strength weakness, but market will keep on trading this one in purely on OPEC and stockpiles and exports figures. Okay, it's a pretty close market these days, the old one. Anyway, I spoke too much. I have to go. Thank you for being here with me. Sorry I gave you such huge levels today, but the fact is that with the US elections going on, there's not much more to say. Good luck to all of you who attempt to trade them, and see you back next Tuesday, okay? Thank you for being here. Bye bye.